Righty ho, everyone, and welcome to a brand new week of trading. Learn to trade live and free with Ash and me. Me being Jeff Pine. Oh, goodness me, I've got a feedback in my ears. It's kind of weird. Every day this this platform gives me a new challenge. Okay, that feedback's gone, and I'd like to welcome you to this the brand new week, a very big one. Well, not so much in the early part of the week, but in the latter part of the week. Definitely a massive potential. What should we call it? Change of directions, volatility. We should see all of that upcoming. One would think from around about the Wednesday mark, and of course, depending on where you are in the world, will depend on whether that's Wednesday or Thursday morning or whatever the case may be. But what I refer to, of course, is this one, the FOMC statement and federal funds rate. But that's not all that's happening this week. That's for sure. For most of us who are in this broadcast live, that will happen overnight on Wednesday night slash Thursday morning. And of course, nothing tipped to change there. The Fed tipped. Hi, Lewis. How you doing, mate? The Fed tipped to keep rates at 1.75%, which is far beyond most other countries, and therefore the interest rate differential should remain the same. As always, not so much we focused on that number because that's probably already priced into the market, but we'll be looking at what happens in this particular item, the FOMC statements, in which the Fed will probably say everything they've said for the past 3 months, but they might have a little nuance in there or a little influence, a little influx on some particular phrase that sends the market crazy. Who knows? We'll see come Wednesday night slash Thursday morning. But as I say, it's not all that's happening this week. We do have similar policy statements on the Swissy, on the Euro, and there is one other, is there not? If my memory serves me correctly. Swissy, Euro, dollar. That's enough, isn't it? And we had the CAD last week, I think. Yeah, that'll do. But also on Thursday, there's a little thing called a federal election happening in Britain, which of course will point very clearly towards what will happen in Brexit. Now, I'm no expert on that, and I don't claim to have any inside knowledge or anything that's going to say, okay, we're going to see a pound that does this, or we're going to see a pound that does that. Ash is all over that. I'm not sure he can actually join us today because he is flying. I'm not sure at what part of the travels he's actually at. He's been in Singapore, of course, over the weekend. And if he can't join us today, then he will probably try tomorrow, depending again on whether he's home in time. So it is a massive Thursday with the Swissy and the pound and the euro all coming together there in a big flurry of what could potentially be a very big volatile day of trading. We shall see. I'm not sure what I want to do leading into that. To be fair, it's very widely tipped and forecast, of course, that Mr. Johnson will win his prime ministership back. And certainly, again, I'm not going to argue against that, whether it's right, wrong, or indifferent. There will be a few polls, no doubt, prior to that. And if that's the case, maybe there will be a little bit of volatility yet to come. Well, in fact, you would be expecting a little bit more volatility to come on the pound. But it is a big week. Nothing happening too much early in the week. Of course, if you discount these two numbers that were posted over the weekend, with China giving us a bad lead in, if you like, for that particular scenario. No surprise here. I wouldn't have thought that US denominated trade balance is down a little bit. You would expect that given trade wars, etc. Not sure it really is going to change too much, to be fair. Don't know what Governor Lowe said today regarding the Aussie. I wasn't across that, but I don't know what the Aussies done either. We'll take a look at that in just a tick. Righto, so that sets up the week, guys. If we can kind of get on the right side of things here in the early part of the week, I think we'll be in for a pretty exciting time, given Wednesday and the Thursday in particular. But Friday, of course, we'll top it off with retail sales coming out of the States. So that's what we've got to look forward to this week, and a whole truckload of stuff happening, as I say, towards the end of the week. Righto, let's look at some charts. Oh, we've got an open, haven't we? Pound. Sorry, I forgot to do the pound. All right, the pound today, what have we got? Hourly chart. Here is the 9 o'clock bar. Here, one would suspect. Yes, it is. So if you're trading that bar alone, then your entry would be 10 pips above and 5 pips below that bar. It is a classic inside bar on a big move up the candle prior. If you're trading the range, you would look to place it along above this bar. You'd use that bar. Oh, no, you wouldn't. You'd use that as the low, that little tiny bar there as the low. So you'd look to place your entry short at 1.3140. We'll do that. 1.3140. That didn't grab it. There we go. 1.3140 is our entry short, and our entry long will be 10 pips above that bar there, whose high is 1.31802. We'll call it 1.31881, and we'll go to 1.3191 as our entry long. 1.3191. For those of you who have been following this particular system, which is in beta mode, as I continue to say, we're really just trying to work out the best management for this particular system, which is, of course, trading the first candle of London session on pound US dollar. It's an old system, and as I said, one that I traded many years ago, and we're just trying to refine it now and see if we can get the best out of it, if you like. My suggestion to date, if you weren't in the show on Thursday, is to do exactly as we've done here with the entries. So put 5 pips below either the last 3 bars before London or the last bar before London. Leave that up to you guys to fiddle with. I'm using the range of the previous 3 bars to London Open on an hourly chart, mind you, on the 4 hour there. I'm not sure why, but I am. So we're using the hourly chart, and you can either use the last bar, as I said, or you can use the range, which is the previous 3 bars, that one, and that one, which is what we've done today. And our entry is 5 pips below this bar or the low of this bar, and our entry is just short. Our entry long is 10 pips above the high of this bar. So we'll keep monitoring that as we go. If you've got any suggestions, guys, if you're noticing anything in particular, how to manage this, where to put your stops, etc., then feel free to punch that into the questions box, and we'll have a look at that so all of us can see. Thus far, my best case scenario has been to trail once you get triggered. Obviously, cancel the opposite order. So if you get triggered long, cancel the short. Where you're putting stops is interesting at the moment. If you're using the entry short as the stop for the long and vice versa, then that's an interesting way to move. What I would suggest you do once triggered at this point is to trail your stops, not on the hourly chart, but on a 15-minute chart. And that's the best I've seen at the moment. And that's just from a casual observation. I haven't really gone into depth with this, so no big deal. We will iron this out over the next couple of months and hope in the new year to start trading with a bit of seriousness about it and see if we can make some money on this. So again, I invite you to put your thoughts into the questions box or comment box or chat box, whatever it is on this platform, and we'll go from there. All right, just got a message from Ash. I'll just read that. I think he's stuck somewhere. from what I just saw. Okay, so yeah, he's not going to be with us today or tomorrow, but fresh and lively, ready to go on Wednesday will he be? And that's really, I think, when the week's going to start. But that said, let's take a look and see what I see for the opening few days of the week. There's really three currency, maybe four currency pairs I'm looking at, and they start with pound Kiwi. Why pound Kiwi? Well, they're kind of the two strongest currencies on the board at the moment, and it's going to be an arm wrestle as to which one can take upper hand here. There's a couple of things I see, and what I see primarily is yes, we've had a bit of a double top sitting here. Um, Call it what you will. On a daily chart, it probably doesn't look that. It's probably more like a tweezer top than a double top on a daily chart. Then we've gone into a range thereafter. We've tried already one, two, three, four times to break clear of this range and take off to the south side. But at this point in time, all I'm seeing is a continuation of the trend. So higher highs, higher lows, higher highs, higher lows, higher highs. Okay, here's where it comes a little bit creative. You've got to get a little bit creative. Is this a lower high? Sorry, is this a lower low based on these lows, or is it a higher low based on this one? Okay, I'll leave that up to you to determine. I'm going to call it a higher low, right, based on this low. And also the third in succession false break of here, maybe even the fourth in succession false break of this consolidation area. It's also a false break, potentially a false break of the bottom of this rectangle right now that we're seeing. So we've broken, we've consolidated, we've come back inside, and we've retested. It's also a genuine slingshot two candle setup. Excuse my dog, he's got something interesting downstairs, obviously. And we've had an approach of the trade line, put in a spinning top there at the monthly pivot and the trend line. Again, we've had one, two, three, four cracks at this trend line in the recent past, and we've pulled back away from it. That's a genuine slingshot trade, even if we discount the potential of the false break here of the consolidation area. The problem I have with this should be evident to those of you who follow the way I trade, and it is we've got this monthly pivot dead ahead, and if we were to take this trade, we would have to put our entry above this bar and our stop loss below this bar, which is about 170 pips on the daily chart, and we're trading into not even 1/10 of that before we hit a resistance level. That's what makes it extremely difficult to trade. Extremely difficult. How do we deal with this? Well, there's two ways you deal with this. Well, two ways I would deal with this. One is do nothing and wait for an opportunity that is clear and um, not as risky as this one. That would be the first thing I'd be looking at. The other thing I'd probably consider would be putting my entry above this bar here with my stop below this bar here. That's worthy of consideration. Um, but, are we going to get exactly the same bar and a clean out here and everything goes short? That's the risk that you're taking on board if you're considering that as a potential trade. So it's not an easy task, really. The other way is to wait for the break and then get a retest of both the monthly pivot and the trend line if we get that luxury, and then you could look to trade it with a far more comfortable scenario that exists at this point in time. So they're the kinds of things that I'm looking at. Why am I really committed to the bullish side? Look, that's a pretty good question to ask, and I'm glad I did because I now get to answer it. It's dependent a lot, of course, on what's happening with the election coming up on Thursday, and of course, we have had ample time for the market to decide. I think that we've had ample time for the market to decide whether or not Boris Johnson means a good thing for the pound or otherwise, because that really is the way that things are looking at the moment. It's looking like he will win the election. And of course, if that's the case, are we priced into the market? Are we too late if we're trying to trade the pound long? I don't think so. If I'm looking at a bigger time frame here, yes, we're late. Definitely, we're late. But um, are we too late? Is the question. And I think the answer to that is no, because there's still, for mine, if this goes, there's plenty of upside available to us. Again, the only thing that's stopping me right now, because on this chart, you've clearly got a higher low here. That's very clear, and that bar there is not too bad either. So you know, do you force your way in here on a risky trade, or do you wait until you get the break and retest? I actually don't think we're going to get the retest. I think it'll just shoot away. When it does, and it'll go straight through the top here, and that, of course, is either okay, so be it, or I need to get on, and I'm going to leave that with you guys. That's a personal risk evaluation that I'm not prepared to call. Myself, I'm going to stay out. I'm going to wait, and if I miss it, I miss it. It's pretty much that simple. So we may catch that on a pound breakout trade. Who knows? Um, I think I'd rather trade it that way than take this risk that we've got at the moment. So that's pound Kiwi. Yes, I am bullish because I see what I see. I see the potential for the false break. I see the potential for 3 false breaks in a row, which tells me that the high probability for this scenario is that we will break to the high side of this consolidation. So yep, I can see it. I can almost taste it, but I'm staying out for now. Mind you, if there's something that turns up on a smaller time frame, for instance, let me have a look at that. Let's say we've got, that won't give it to us. Let's use this low here and this low here, for instance. So if price were to come, this is not relevant to this chart, so I'll get rid of it. So let's say that we do find price, or price does find its way to, let's get rid of this, does find its way to, that's not going to do me any good, it'll have to be that one, does find its way to one of these areas, which is where I want to trade, right? This is a 1 hour chart. It could be a 30-minute, whatever you choose. In fact, you've probably got better options on the 30-minute chart. Actually, no, not at the moment, because I don't have a clear new high here. I do have a clear new low, so we could use that. It's a sneaky little intraday trade line that I use. So if we can get some price action here, or here, or here, then we've got something to trade with. Maybe even up through here. And what I'd be looking for is price to come back down here, test the daily pivot. I'll use the pen so it makes it far more obvious. So get price down to here and find the support, consolidate a little bit, couple of candles, 2 or 3 candles, get back above here, retest that area, or come back even and retest the daily pivot again. That would be the time to go long for me. So I'd be happy to trade that. Exactly the same scenario off this one. So something like that. Off this one is far less appealing. Why? Because we would have left all of this on the table. We would have missed out on all of this. But if we do get a break here, take out the high, come back and test the low, the monthly pivot and the broken trade line, then you've got a fairly decent idea that this is going long anyway. So they're kind of the 3 scenarios I'll be looking on pound Kiwi. I know I'm spending a bit of time on this, but I am pretty keen to get long if at all possible, but not at all cost. So that's where I'm at, guys, on pound Kiwi, and that's probably the major one I'm looking at the moment. But I am also focused on Euro CAD. Now, Euro CAD, you've got to kind of, well, I don't know about forgive, but you've got to go back to last Friday for Euro CAD, and it makes it a little bit sticky for mine. And I will go back to last Friday because what we had coming out of Canada was not pretty. We had employment change, which was a shocker, absolute shocker. But worse than that, the unemployment rate rocketed by nearly 0.5% to 5.9. That's very bad news. That ain't good at all, and it kind of sways me against what I was looking for on Eurocad. I was looking for short because similar to what we've just discussed on pound Kiwi, where we've had a couple of false breaks of this rectangle or horizontal range, that to me is a very, very bearish sign. Now, this candle here almost interests, well, it almost interests me, it does interest me. And there's really no reason why I can't trade that. So, on a daily chart, if this remains to be a lower high, it's a pretty clear signal that we're going towards the bottom. If we can retain that as a high, if it gets taken out, then it doesn't matter. Who cares? We'll see what happens next. But I am inclined to actually place that order underneath here, but it will be at pretty small risk. And the reason it's going to be a pretty small risk is because we're trading straight into lows and previous lows over here as well. Let me make that a little bit clearer. Go thick. No, don't want that. Want that. And we want that. And we probably want that thickness. That'll do. So you can see it's been support here before. Not so much. Here's a bit noisy through this area here, but recent support, yes. So that's why it makes it a little bit tricky to go short here. If I have a look at what happens thereafter, which is, we're kind of talking reward to risk here. So let's say our risk is that bar, 83, let's say 85 pips. Our reward to the first trend line is about 1 to 1. And then we've got another almost 3/4. So 1 3/4 to 1. Is that good enough to take the risk on board is probably the question that we ask. I think the way to play this for me is take the trade, but at small risk. Let it take these lows out where this black line is. Come back and retest the area, and then I can add to the position once we get that retest and get back underneath that line. I think we're going. So we can actually improve this reward to risk by doing this kind of thing. Let me show that to you. Actually, I might go as thick this time. So if we place our entry here, right, stop loss here. If you want, you could take profit at that level. That would also be okay. Or you could move your stops to entry straight away. Whatever makes you whatever floats your boat. I think this level here is probably around about where I'd want to take my first profit level. So these lows. And then I'd be looking for price to go back and retest that area there. Even if it bounced back and retested the area there, I could add to my position at that level. So if let's say we used 1/4% going in here, and then we got the bounce back to here. We've only got 1/4% at risk at that stage, right? So we can keep our stops there. And if it goes back and hurts us, then so be it. We've lost 1/4%, or we could bail out at the monthly pivot, whatever, however you want to manage that. But if we do get that retest and we don't go back above here, then I'd be more than happy to place a second entry underneath here. And the risk would only be probably that much to get that much. That becomes a whole new ball game. So that's the kind of thing I'm tossing around in my mind. And let me see how much that would give us if we were able to pick that up. Now, if we don't pick that up and it doesn't come back and retest it, we're still in the trade, right? And that's the whole idea. So let's say we got a breakdown to here and we retested straight away. So our entry becomes this level, our stop loss becomes this level. So 40 pips. First point of danger here would be the trend line. You've got 1.5 to there, and by the time you get here, you've got 3 to 1. So that makes far more sense, doesn't it? So that's what I'd like to trade. But if it just goes straight away, then you won't get that opportunity. You'd still get the what was it, nearly 2 to 1, did I say? you'd still get the 2 to 1 that's available, not quite 1.5 to 1 that's available. So that wouldn't be such a bad thing. So I am going to place that order, guys. And as I said, I'll place this on the EA because it's a daily chart. Actually, I haven't got the new EA on there. I won't. I'll do it manually and then transfer it to the new EA. So it's going to become a sell stop. I think 0.25% on this. What account am I on? The TTR account. So quarter of a, I think is one, probably one lot. I'll have a look at that later and make sure the risk is right. Pending order short, and the level I would like to enter at is 1.4608. So 1.4608, and the stop loss will be above that bar at 1.46, let's call it 90. 1.4690. We'll worry about taking profit if we get into the trades. That's now pending order, and there it is, stop loss there. I don't know why I can't see my entry, but it's underneath that bar, cut by about 1.5 pips, about the spreads. Options, as I said, take profit if you want here at 145.87. I'm going to take profit around about this level, just in there at 145, let's say 145.55, and then I'll look for that second entry as a retest of this trend line, and I'll place my order underneath the bar that comes back to it. Okay, so that is EuroCAD, and the one thing here I stress is that that bad news on Friday for the CAD will not help this at all. Won't help this at all. And the testing material here will be this high. If this high gets taken out, cancel the order. But if it remains a lower high, then we're still playing technical ball here. Okay? So that is it, EuroCAD. I don't want those crosshairs. Aussie CAD. It's a little bit trickier, Aussie CAD. And the reason it is a little bit trickier is because we're dead set in the middle of this range that we've been following. And I really don't think I can make a call on this right now. What I'd much prefer, and this trend line now is gone, so I've got to move that to here. So we've got a couple of low test bars sitting here, but we're right on the bottom of the range. I don't want to trade that here. I don't want to trade it long either until we come back to, let's say, the monthly pivot. That's what I'd like to see. If we do come back to the monthly pivot, then we'll be in the ball game here, and we can look to trade this long then. But we've got a lot of work to do, so I'm not going to continue with that one. Euro yen, I've been keen to get short this. I don't know if you've been in the show for, well, probably a few weeks now. I've been looking to trade this short, and silly old me, well, not silly old me, just the way I trade. And we saw this bar here. Where are we on a daily chart? 1, 2, 3, 4, 5, 6 days ago. So that bar happened last Friday week, and we were talking about this last Monday then. And we said, look, we'd love to trade this short because essentially it is a lower high on these highs here, and we can see this definitely going short. But the problem, once again, was trading straight into the monthly pivot, straight into the weekly pivot, both of them untested, and that turned out to be a wise thing to do up until Friday, when this got a boost, as did most other things. I think on the incredible, well, it's not incredible, the good number, if you like, posted on NFP. So the market reacted to that in kind. It smashed through these pivots, and that's pretty much, I was going to say a sad thing, but it's not a sad thing, because really what it does do, if we can get a retest of these pivots, that's when we get a far better run at the short. Whether we get the opportunity or not is, of course, completely conjecture at this point. But that's exactly what I'd like to see. So I'd love to see price get back to these pivots, or even the bottom of the ascending channel that we've noticed, which is inside the other ascending channel. So price back to here, here, or here, preferably here, and then we can look to short this. So that's exactly what I'll be looking to do on Euro Yen. May have missed the opportunity. There was also a false break here up until Friday, or on Friday, that maybe you could have traded if you're really, really brave. But I don't trade on Fridays as a rule, and certainly I wasn't in front of the charts, so it wasn't even tempting for me because I didn't even see it until today. So, yeah, false break is there. The lower high on both the daily chart and the 4 hour chart, it was there, but these old pivots got in my road, so nothing there for me. Kiwi yen, do I have an interest? Oh, no, not really. Not really. Um, I think I've come to the end of those that I'm looking at for the first part of the week. So that is it for me for today, guys. I'll just hang on till the bottom of the half hour and see if I've got something on the 30-minute charts. But in the meantime, let's take a look at the pound breakout trade, which has not triggered. Let's go back to Friday and Thursday while we're waiting for this new candle and see how they would have gone. The Thursday bar was this one here, and our entry would have been 10 pips above, so we would have, I think, would have been taken in long. There's the bar there, so 10 pips above there would be 131.54 ish, about there. So you take it in on this bar. So you're then looking under my management regime, or current management regime, to trail your stops after two buying bars. So 1, 2 buying bars, stop loss there. Well, you wouldn't have moved it too much, I don't think, but your stop loss would have been there. Next two buying bars are there, very small, so your stop loss would have been moved to there. The next two, and yeah, he would have probably been taken out with this one, if not that one, or potentially that one. So you would have made a small amount of money, but the key here is you would have made money, of course. Friday's bar, 9 o'clock bar, is that it? Yes, it is. So there's the 9 o'clock bar. So there's the 3 candle range. Entry long, 10 pips above that one. Entry short, 10 pips below, 5 pips below that one. I actually already put that one in. So you would have been triggered on this bar, depending on how you're going here with your stop loss management. You wouldn't have moved your stop from wherever it was until you got these two bars, so two seller bars. So move your stops to there. Next two seller bars there, move your stops to there, exactly where you would have entered the market. So you're back at entry, and you would have been taken out at entry. So nothing to be made there using my trailing method, that is, on Friday, and there's yet no trigger today. So nothing doing today so far. But if you are following what we're doing here, you can see that when we lose, if we lose, you're not going to lose too much by and large. I think the only loser was back here somewhere. I can't even see it now. But when you win, if you're trailing two 15-minute candles, this being the 15-minute chart, sorry, I was actually on the hourly there, but similar. If you do get a genuine breakout, you're going to make a fair bit of dough here. So this one entered here, 2 buyer bars. You would have only made a little bit of money because you would have got taken out here. This one here, that was the candle, so you got shot into the market here without question. 2 buyer bars, 1, 2 stops to here. Next 2, 1, 2 stops to here. 1, 2 stops to here. He's still not taken out. Next 2, 1, 2 stops to here. 1, 2 stops to here, etc., etc. Here, 2 buyer bars, stops to here. Next two buyer bars, stops to here underneath this one. Next two buyer bars up to there. Next two buyer bars stops to there, and so on and so forth. We get to here, still not taken out. Stops to there. Sorry, stops to there, and finally you get taken out at this level after making all of that ground. Nice. That's kind of what you're looking for. You don't want to get too, well, you do want to, you don't need to get too many of those in a month to make your month very, very juicy. So continue to watch that one, guys. We will continue to monitor that. Won't be trading it until the new year because I want to see a decent forward test, and then we'll go back and have a look and see what the best way to manage that would be. All right, we've got new candles. Let's take a look at the ones we want to trade. We want to trade pound Kiwi long. We still don't have a genuine 30-minute high here for me, so there's no trade yet. There's no trade line yet, so I have to wait on pound Kiwi. EuroCAD is the other one I want to trade. Do I want to trade it on the smaller time frames? I don't think we even discussed that, but I would be willing to do it if we did get a setup. Currently, we've got trade line coming through here, and we look like we've poked our bib through that. This actually looks interesting. If we were to find the weekly pivot as resistance here, and price would find its way back under here, even giving us a short response back to the weekly pivot perhaps, or just the trend line, would we have enough room to take some profit? That's the question. So let's say we come back to here. Yeah, we'd have to get back to the weekly pivot, I think, before I'd get interested, because the bars are too small. Then if that were the case, we've barely got room to take profit here before the daily pivot. That's okay. I'd take that because there is room to take it. And make yourself safe, so take half off the table, move your stops to, let's say, 7 pips, because that's where you'd be taking your first profit. And then if you're lucky enough to get through these pivots, your target is pretty obvious down here at DS1 or the trade line. So that's possible. EuroCAD short like so. Aussie CAD. Let me see. Nothing really there that I like too much, but there's a couple of lines we can use. That one. Interesting. Close. Oh no, it's just a little bit lower than that, isn't it? There we go. So very tiny low test bar, but on the daily pivot. There'll be some people looking at that thinking of trading it. I look at it and think of trading it, but then I say to myself, well, that bar is 3 and 4 pips, and that's it. I don't trade 4 pip candles, although it looks nice. It's not something I do because the market hasn't got to move too far to take you out very, very quickly. Yeah, it's a bit of a logjam here with the daily pivot and the weekly pivots. It is Monday, big week ahead. So yes, I do want to get into a position and get myself safe in the market. There's no question there. But I also don't want to take foolish risks, and trading 4 pip candles is a foolish risk for mine. So what would I like to see? Let's go back to that daily chart. Yeah, I don't know really. I don't really know what. Yeah, I'd just like to see it get to one of these extremes, I suppose. Get to the top of the range or the bottom of the range. So I'm really not that interested in the small time frames at the moment. And finally, Euro Yen. Well, we've got to get back to here, but I don't know that I want to trade it back to there. Let me see. Untested daily pivot, retest. Yeah, look, that's not so dusty. Pivots are very close together. That's generally a bit of a magnetic force to the market. No trade line through here yet, so we don't have a new high. Yeah, it's a bit rough, isn't it? We're a long way from being able to trade this. But yeah, down here, find the support back above it, retest it. Why not? There's a little long there to daily pivot. Might be a go. We shall see. But nothing at the moment, guys. It's very much a case of wait and see, as always. And the market's not showing us too much just yet. How's our pound going? No trigger. There's the entry short. There's the entry long. So nothing doing at the moment. This may or may not break out based on a news poll. And if that's the case, I think it's not such a bad idea to be trading at this point on the pound as a breakout. But keep your risk very, very small. I believe that's the wise thing to do as well, because we really don't know what volatility can do here, and if these polls are going to be genuine um, release points, if you like, for buyers or sellers. So, guys, that's it. Back with you again tomorrow when we'll do it all again at the same time in the same channel. Have a great Monday and good trading week ahead. Look forward to your company throughout it. Bye bye for now.